how do you know when the recording started?
It should say like it's recording. I don't think it's very
guys,
helpful.
can you see my screen?
Yeah.
Oh yeah, it's recording.
Okay, sure. Let's get started then. All right. So welcome everybody to our event. So this Warwick M&A group with Warwick Consulting Society, specifically Women Consulting. So by way of some introduction, I'm Abby. I am head of Women Consulting, and I am also head of marketing at Warwick M&A Group. I will be doing a summer internship in investment banking, and I thought this would be a useful event. So today we'll be doing specifically the AstraZeneca acquisition of Alexion. Next slide.
Yeah.
So before we start, there was meant to be a poll. It's not working. But basically, we're going to assume that everybody has like a little bit of knowledge of how to do a case interview, but we're not going to assume too much. So it'll be quite beginner friendly. Do make sure that you're muted unless you want to talk. We'll try to keep this interactive. So we're going to do like a case and then a few questions. So if you have any questions or thoughts or responses, please do put them in the chat. If you'd like to verbally share something, raise your hand, and then if we have time, we'll answer that. We're also saying that if we'll be choosing like 2 best responses today, and if you really like it, then we'll do like a CV review, so you can message us on LinkedIn for that. So we'll choose somebody at the end who we thought had a really great answer. And just to caveat everything, there are many ways to approach a case study. This is just one way that we can do this, and we may have missed something because obviously we're not like experts here. So do make sure to participate. Say if you think we missed anything.
Hey, George, do you want to start?
Yeah, great. So hi everyone, I'm George. I'm a first year economics student at Warwick. I'm not actually at Warwick at the moment, I'm at home. So I'm part of the Warwick M&A group, so specifically one of the sector teams, the healthcare sector team, where I'm an analyst there. As you can see on the slide here, we release monthly M&A reports going through notable deals of the previous month, and also running through trends in the industry. Warwick M&A Group as a whole, we also do webinars and discussion panels such as this one, which is good. We also have a mentorship scheme, so look out for that when it next opens. And at the moment, we have a collaboration with Dragonfly Hong Kong, which is essentially an event which we are doing with them, and it is still open, I believe. You might have to check on LinkedIn if it's still open. And yes, we've also got another event coming up as well.
And I'm Ines. I'm a second-year student of the engineering school, and I'm junior exec of the Women in Engineering division inside of the Consulting Society of Warwick. And so some of the events that we have are the London Consulting Summit, which is coming up, the Women's Summit, which is the 6th of March, and you can still sign up. We have a newsletter every 2 weeks, more or less, and a mentorship program, like George said, too, and the sexual harassment event in collaboration with other societies on the 22nd. So keep up to date to that.
So just going through what we're going to do today, we're first going to go through some general advice, then we'll give you an introduction to the case, and you'll be given some time to also read the case. It's like 2 pages long, so not terrible. Then we'll be going through the questions that we'll go through, then we'll actually do a walkthrough, and you have a chance to participate there. Then we'll just finish with some questions and wrap up. Yeah. So first of all, why did we think that consulting and IBD was a good thing to put together, right? So of course, both of them, on a very superficial level, they both have M&A case studies in the interview process, and the interviewers ultimately do look for the same thing, which is content and presentation. So I found, like, when I was doing applications, was that consulting, because I did a little bit of it in preparation, it does help you provide a useful structure, technique for analysis, strategy, and creativity general knowledge that you don't necessarily have if you just look at IBD interview preparation. And IBD also offers a deeper level of technical information, and you're able to extract so much just from a tiny piece of text, more so than if you had a more general understanding. And, of course, specific commercial awareness, and it gives you a new way of looking at things. So, a lot of people, if you're applying for consulting, you only look at that. If you're applying for IBD, you only look at that. But actually what I found was really useful was having a combined approach and using both methods. So yeah, Ines will be talking through the next part.
Yeah, so some case interview tips before we start are basically, of course, knowing the basics, because it will help you understand all the case study. Have a good general knowledge, know the macro trends. What is very helpful is the McKinsey 50+ page document. Of course, don't be afraid to ask questions to the interviewer. Be structured so you don't get lost in the middle of it, and for that also take good notes. Make sure you think about the case from multiple angles, so you just don't stick to one perspective, and in a way so you don't miss any detail. Of course, if you're in a group, collaborate with everyone and get along with the interviewer as much as possible, because then establishing a good relationship is always good, and he will overlook mistakes. And if possible, send a thank you email or message afterwards.
Okay, yes. So I'm gonna introduce the case now, and then in a minute, Abby's gonna drop the prompt which we've put together for this case. So last year in December, AstraZeneca, which is a very large British-Swedish pharmaceutical firm, announced that they had entered an agreement with Alexion, which is a US-based pharmaceutical firm, to buy their entire company. So Alexion is an immunology specialist, and AstraZeneca operates across all different pharmaceutical sectors, but specifically in oncology. Oncology is where a lot of their revenues come from. Yes, and there'll be a lot more information on the prompt.
So it's in the midst of sending. So if everybody could just go onto the chat when it's finally sent. My Wi-Fi is very slow. And what we'll do is we'll give you like a few minutes to read it. It's about 3 pages long. And we'll be basically answering the 4 questions that are put up there today. And we'll be going it one by one. And yeah, it's just shared. So we'll give you until 3:12, 3:13 to read it. Let us know if you have any problems with accessing it. Yeah, for Tim, just read the case study until 3:12. Okay, so I think if you have an issue downloading it, what I will do is I will send, we did on a Google Doc, so I'll just send a link where you can view it. If that still doesn't work, message again. So I think it's about time. Like if you haven't finished reading it, don't worry, because we'll be going through it again anyways and give you more time to look at it. Yeah, so I don't really know how far everyone's gotten, but we'll assume that you've read about half, 2/3, something like that. So yeah, George.
Yeah, okay. So if we can go to the next slide, please. Thank you. So we're just going to start by running through a couple of key terms which are important when analysing a deal. This isn't the most exciting part, so I'll try and get through it relatively quickly, relatively formulaic. So the top couple are relatively self-explanatory. So the target in an acquisition is the company that's being bought. The acquirer is the one doing the buying. So in this case, Alexion is the target, AstraZeneca the acquirer. So announcement versus completion. These are two dates in the process. Announcement is when it's made publicly known that the two boards have come to an agreement regarding a deal. And completion is once shareholders have voted, once it's been cleared by regulators, and once debt has been arranged. That's the day when the deal actually completes. Yeah, it does what it says on the tin. So in a deal, debt is money that is borrowed to fund the acquisition. So in this case, you may have seen on the prompt that AstraZeneca is borrowing about $17.5 billion. Equity is essentially paying for the deal by giving Alexion shareholders ownership in the combined company. And yes, so it says in the prompt somewhere that there is combined ownership as part of the deal. Okay, so enterprise value and market cap. So EV stands for enterprise value. It's the value of the entire business. And if you made it to the, I can't remember what the name of the section was on our prompt. Essentially, it's market cap plus debt, plus total debt, minus cash and equivalents. And sorry, I probably should have explained what market cap was first. Market cap is essentially the combined equity value of the company. So the value of each share of Alexion in this case, times the total number of shares outstanding. Okay, so EV over EBITDA and price to earnings, these are what are known as multiples. So when valuing a company, it's typical to look at it relative to the cash flow it produces and its profitability. So EV over EBITDA is a very common one used, and you obviously, you measure this by dividing enterprise value by EBITDA. So when going through the deal, it might be helpful to try and work out the EV over EBITDA multiple for Alexion, and it might be a little bit cryptic among the numbers, but you can find it out certainly. And then price to earnings is the equity value of the company divided by its net income. So once again, a similar multiple. Finally, the equity premium in a deal is the amount, the premium that shareholders have to pay, the premium that the acquirer has to pay to shareholders to acquire the company. So for example, if a company is trading at $100 a share, it might well have to pay $130 to buy it, and those $30 would be the equity premium. The reason they have to pay this is because they can realize synergies, so the company is more valuable to the acquirer than to the shareholders of the original company, and also it gets to control cash flows. So that's a run through of the key terms in this deal. And yes, so maybe if anyone has got any ideas on the EV over EBITDA, just put it in the chat. It might be an interesting one to see if anyone's worked that out yet. Okay, great. Next slide.
Yeah, guys. So if you have any suggestions, just write them down, as George said. But we also wanted to introduce to you some frameworks that would be very helpful for this specific case study. We don't want you to stick to one framework when doing a case study, but specifically this one is already kind of structured. So that's why we just wanted to explain the one that we're using. However, in general, case studies just don't learn the types of frameworks and get stuck to one, because then you're gonna miss things, and then you're not gonna do a good interview. First of all, we wanted to explain the WiC, which is like a more consulting framework. which is the mutually exclusive and collectively exhaustive, which basically means that you have to avoid overlap between buckets, but at the same time, buckets including all possible items relevant to the context. And so, yeah, this just makes sure that you separate each bucket, but then include them all. And when it comes to the mergers and acquisition framework that we think is the most suitable for this case study, you have to tackle the main structure would be the market, the target, the buyer, the synergies and risks. And basically those, we listed some of the topics that you can talk about for this matter in each of the structural parts. And so we wanted to give you a few minutes to think about question 2 after knowing the key terms and the frameworks. And then we'll ask you what you suggest for question 2 and then explain it.
Yeah, so just read the last 2 paragraphs. That would be the most relevant part, although obviously you can read the rest of it as well for context. So I'll give you. Yeah, Ines, can you go back to the previous slide?
Yeah. I think someone cannot download it.
Oh, it's okay. I just sent the Google Doc for those who can't. If you need to remember what the question is, it's on page 4 as well. Yeah, and if you have any preliminary thoughts, just type in the chat. If not, we'll just move on to the answer. Well, our take on the answer.
Yeah. So please, guys, if you want to speak up, just unmute and you can talk and say your opinion. So for the answer of the question 2, which is stated some of the things we would talk about. So we would talk about the situation and the market trends before COVID, how it impacted the pharma market specifically, in this case for Alexion and AstraZeneca, and how the M&A activity has been affected during the COVID pandemic, and the new innovations that these would have implied. Some of the trends that we identified in this case were digitalization. So healthcare has been passed on to a lot of digital platforms, and not just for actual problems, but to prevent some of them. And so prevention healthcare has come up a lot. Supply chain disruption and shift towards automation, connectivity, electrification, and shared mobility. And also energy transition, which doesn't really affect the pharma market, but it's also been a trend lately because of the climate change. Yeah, those are some of the trends that we consider that you should mention when speaking about the markets and the key industrial analysis. Should I go to the next question, guys, or do you have any suggestions? Please just type them in.
Yeah, I do notice that we didn't really speak about like what's specifically in the brief. So if you want to think about like what does the brief kind of indicate, that might be really useful as well. And just in general, like this 4-question framework is really good because like before you go into any interview, you don't know what industry your case study will be in. So it's actually better just to think very broadly about these questions. And then whenever you go to any interview, that should be able to help you, even if you haven't prepared for that specific industry. Just using that framework and thinking about it systematically.
Should we go to the next question?
Yeah, sure. Let's do that. So yeah, just to like go through, you know, maybe some things that you could note inside the brief that we haven't spoken about in this specific framework. If you look at the last 2 paragraphs, you can see that it says something about how the market is structured, right? That there's a trend towards consolidation, you know, the size of companies, you know, these types of things. So these would be what you want to look at as well when you do your real case study. But that's okay. We'll do the next question, which is, I think, the most like not complicated, but it's the one with the most content, which is like the strategic rationale for AstraZeneca's acquisition of Alexion and why Alexion would want to be bought over. So once again, you want to start with thinking like very broad before you go into narrow frameworks. So, you know, something great to start thinking about, okay, like what are the synergies? So for AstraZeneca, their main rationale would be synergies. So think about how would you split up your synergies and then split it even further so that when you present, it can be very structured and very clear. So should we give some time or should we just go straight to it? I think this would be a good one to, so this one should be quite, yeah, this one should be quite complicated. Okay, so let's read, so for Adrian's question, I think we can do that later on towards the end, because I think this is quite a specific question. So hopefully when we go through framework, it will be clearer. So that's okay. So I think I'll start with the how to approach the question, and then if there are any specific questions, you can go into that as well, because I don't think we gave you a tremendous amount of time to answer these questions. So Ines, if you can move to the next slide, right? So, you know, from a rational perspective, right, why does any M&A deal happen? It's mostly because the acquirer wants to realize synergies. So that's why we start synergies as a thinking point. And usually synergies, there are 3 types of them. And I don't think you can really come up with any that are outside of this. So this is the messy part, right? There's 1, revenue, 2, cost, and 3, financial. So thinking more about revenue, how is that split? Like how would you realize greater revenue? So, you know, 1, product, I think that's very straightforward, and 2, geography. So let's think more about product. You would have, you know, of course, in the short term, you know, you get the access to the current products that Alexion is making, and obviously Alexion gets some access to that as well. And then you also have new products, right, which is a bit more on the longer term horizon. But, you know, if we look at those 2 first, then we can think about, okay, what is the brief telling us that would be useful here? So we know that 1 is in immunology, so Alexion, and oncology is done by AstraZeneca, right? So what does this really mean? And they also do rare diseases as well, AstraZeneca specifically. So what does this really mean in terms of how they position themselves? So you want to think about the product line, right? If you're any company, you want to have a generally broad product line. 1, because you can attract many different types of people, but that also means you have a revenue diversification in case, you know, let's say for some reason oncology suddenly has a dip in the market. So that's a revenue diversification. So we see that in the product section. So in terms of new products, right, we have the idea, okay, you know, because they both have so much research that's not necessarily publicly available, you have the ability to share your facilities and this knowledge, and then that might actually create new types of revenues. And if you think about AstraZeneca specifically, what they want to be doing right now is actually increasing their foothold on the rare diseases side, because they've kind of been focusing more on oncology, right? So that's a way of being able to establish themselves in a new market. Okay, so that's our first branch done, revenue and products. So let's go to revenue geography. So there are two main reasons here. One is you get new consumers, and two is regulatory reasons. So for consumers, we see that Alexion is US-based, and AstraZeneca is a UK-Sweden company with a stronger foothold in Europe, but they also have a strong presence in emerging markets. The brief says China and India specifically. So, of course, new markets, that means more revenues, higher profits. I think that's very straightforward. Regulatory reasons here is because, medicine is something that takes different amount of times to get regulatory approval. So we see the vaccine, right? Why has Japan not approved it, whereas the UK has, things like that. So it's also a diversification standpoint so that they can always keep a relatively stable revenue. Okay, so that's revenue done. I hope that was clear. So let's move on to cost, which is the second type of synergy. So here, because there's a lot, and you don't want to have like 5 main points, you split into 2, long-term and short-term. So actually start with short-term. So I think that's very straightforward. Headcount and admin, they have overlapping offices in US and Europe. So if you have any like extra offices, extra people, that's a reduction in your cost. Supply chain, AstraZeneca has a much stronger pipeline. So that was actually helpful for both of them. And I mean, Alexion's isn't weak either. So it actually helps them reduce costs in that strength because they have fewer supply chain pressures. And what Ines was saying earlier on is that there's some supply chain disruption, especially with COVID. Moving on to long term, which is the second part of this. So it's still MECE, right? Because you can't really split from short term and long term. So long term, you've got R&D. I think that's fairly straightforward, but it's in the long term because the nature of pharma is that it relies so much on innovation and finding something new that it can make your value go up by so much. That R&D is super important. That's the main investment, right? So 2 is competition as well. So if you read the brief carefully, there's a new company, the Texan company Apellis. Alexion itself was starting to actually infringe on AstraZeneca's space a little bit in a certain market. And it also is to help both of the companies strengthen their position in rare diseases. George put in the brief that the profit margin is so good there. So that's why you want to do that. And if you contextualize this, is that there are so many deals happening that it makes sense that you want to strengthen your position alongside these consolidation trends and establish yourself as a major player. And the third long-term cost is patents. Very simple. Patents are extremely expensive. If you break one, you get sued. So if you're able to share those patents, you might be able to reduce costs and overlap, these types of things. So let's move on to the final branch, which is relatively small. And to be honest, your cost synergies is usually the biggest consideration because cost is the most easy to estimate. You don't need to say this in an interview, but it's just a good thing to know. So let's go to financial. So, it's accretive in the short run. What does that mean? It means that AstraZeneca's price to earnings ratio, the PE ratio, is higher than Alexion's. So that means that its overall share price is likely to go up, which is very, very appealing to shareholders, right? If you read it more carefully, the first paragraph, it's not an all-stock deal, it's a mixed deal. So that means that even though it could be more accretive if it was an all-stock deal, but it also means that if it's dilutive, it would be at a less dilutive pace, right? Especially if it's in the long run, because that might happen, dilutive in the long run. 2, we look at control premium. So the average is about 32 to 40%. If you can do a very quick calculation, how much is I didn't do the calculation, but I think if we did it correctly, it's about 20% around there. But it's very much within the industry standard, so that's okay. And a high control premium isn't necessarily bad if it's justified, right? And so the third point of this will be about cash flow. So we can split this into 2. One is on debt reduction. As George mentioned earlier on, they are buying Alexion with debt. So it's important for them to be able to pay that down, although AstraZeneca doesn't have tremendous amounts of leverage. When you think about that, okay, there's strong cash flow for Alexion as well, and it happens to be growing if you look at the tables. And the profits are also growing somewhat, although it's, that's net income, to put it more simply. It's growing, it's not fantastic, but it's there. But the important part for this is actually how Alexion's EBITDA and revenues are growing very fast every single year, and it's a consistent trend. So that's more important than profits actually right now, because you can pay down that debt as well, which was used to finance the acquisition. The second part of that is, when you have so much cash flow, you can reinvest. And as we established early on, R&D is such a huge cost and such a huge priority for most pharma companies. So, that's a very quick, well, it's not that quick, but it's a rundown of some ideas that you might have. this diagram that I use here, it doesn't have to just be for this deal, but it's a good way to start thinking about the deal that you're looking at. So this is how you can combine the IBD analysis with the consulting frameworks. So we move on to the next slide. So this is much shorter because Alexion is a lot of the reasons will overlap, so that's why we didn't really bother. Revenue synergies will be the same for both, right? So no point going too much into it. So Alexion rationale, we can break down to 3, is shareholder pressure. For financial reasons, part of that, so for instance, its profitability is unstable. If you look at the revenue and EBITDA, that grows every single year and actually quite quickly. So for instance, 2018, 2019, yet their net income fell. So that obviously, if you're a shareholder, that means that's not great for you because you're not getting as high dividends. And the acquisition spree didn't go very well. So that means that they want the company. So that means a shareholder might not feel so confident, or they might also want to be able to earn back some of the money, or they don't. So that's why an acquisition spree might encourage the shareholders to push them to sell. So second of all, we improve the pipeline and supply chain. So Alexion's supply pipeline isn't that strong. So if they're able to access AstraZeneca's, that is much stronger, and that can help them a lot. Third of all, AstraZeneca is much larger than Alexion. So if they're bought over, that will allow them to establish themselves, gain a much larger exposure in the market itself, and that can lead to further growth opportunities along the way. And there are a lot of background reasons as well, but those are some that we can bring up. Next slide. So okay, like when you're in an interview, you can't really say all that, and you want to give it as a proper answer. So how do you put this together? So normally, this is just my recommendation, and this is what I did in case studies, because I had a very we actually based the questions today on a case study I did with Evercore, so it's somewhat accurate. So first, you normally want to do an introduction, right? So today, what's the question? So you can restate the question. Second part, you say, okay, the question is asking us 2 things about AstraZeneca and Alexion. So I'll be splitting it this way, but with a main focus on AstraZeneca because they will be the ones, because there will be a lot of overlap or something like that. They move on. Okay, let's first start with AstraZeneca. Today, I'm going to be looking at 3 main aspects: 1, revenue; 2, cost; and 3, financial. Now, splitting revenue up, we have 2 main arguments. Then you continue the splitting, and you go through it very, very systematically. And so your interviewer is able to keep very clear notes. And this is really helpful for you because sometimes they may ask you questions that this very clear framework will ask. So when I did my interview, they asked me, how do you do a sum of the parts for this particular company? And because I wrote down the 4 main businesses, that was very fast for me to answer straight off the cuff. So keep the good notes, and this is really helpful in general. Then 3, we'll move on to Alexion. So say, okay, I have 3 main points here. Keep it very brief: 1, 2, and 3. And then 4, as a quick conclusion, what you want to do is say, okay, to answer this question, I have laid out the main reasons for AstraZeneca and Alexion, looking at their XYZ reasons. So something like that. You can apply this to basically any case study. And some tips in general: relax, be very clear, structured, and signpost, which is exactly what we're doing here, which is how do you signpost and set up your answer. Prioritize because there is so much information. And your communication skills are really important because you have content. Most people can read the 400 questions in IBD, right? But can you communicate that? That's a very different thing. And so do combine those 2 elements, and do take your time and start from broad to narrow so you don't miss anything out. So that's question 3. If anyone has questions, just type in the chat and I'll answer along the way.
Okay, yeah, so I'll run through question 4. And the question is, what are the key risks and issues for the deal? How can these be mitigated? And I'd actually really like to hear if anyone has got any opinions on this or any ideas. So just turn your microphone on and talk at this point if you've got any thoughts on this question. There are no really wrong thoughts at all. It's very subjective.
And if you want an incentive, if we really like your questions or whatever, we can also do a CV review for you, which I normally hate doing. So if that's appealing. If not, it's fine as well.
I'll give it another 5 seconds. If not, we'll run through my thoughts on the question. Okay, yeah, Ines, why don't you go to the next slide, please? Okay, so I've split the risks and issues down into 4 separate points. operational, financial, internal, and external. So operational. So as I've stated here, there is a bit of a disparity between Alexion and AstraZeneca's pipeline. As Abby alluded to earlier, Alexion has got very strong drug offerings at the moment, especially Soliris, which is a super good drug with $4 billion revenue each year. Beyond that, it's got one more drug called Ultomiris, I believe, which is positive looking forward. Not as good as Soliris though. In contrast, AstraZeneca has got an incredibly strong pipeline, especially in the oncology area. It had a drug recently approved, I think in 2018, called Tagrisso, which is a lung cancer drug. And as I say, they've got a super strong pipeline, which is why their multiples are currently so high, because their future profit generation looks very positive. In the operational side, another point would, I guess, following on from that, be that Alexion's key offering, Soliris, is due to face biosimilars in 2023 in Europe, and also on that point, it has got a competitor, up and coming in a firm called Apellis, which is a small firm. So if another firm enters that market, margins will be cut certainly as competition starts. Okay, so the second point I had was financial, and this would be certainly the $17.5 billion debt assumption. So it's assuming, $17.5 billion worth of debt to fund this deal. And you can say to me that AstraZeneca is incredibly creditworthy. I think it's A+ rated. So it's incredibly well. Its cost of borrowing is very low, essentially, but still taking on this debt will put further pressure on the balance sheet, and it means that if it needs to borrow more debt, there's a chance its rating will decline, which obviously isn't a good thing for its how much it has to pay on its debt. So that's the second point. Thirdly, internal reasons. So one of the key problems that often happens with acquisitions or mergers is frictions among employees and management. Obviously, Alexion employees or Alexion managers perhaps have been able to run the company the way they would have liked for a period of time, and having new overlords often doesn't stem kind of great relationships among the firm. So that's another risk looking forward. And finally, the external one. So obviously, when you have an acquisition, regulators look to see if there are any issues when it comes to competition or declining competition. I've included this point, but I think it's very unlikely in this case that the regulators will step in, simply due to the fact that AstraZeneca isn't a massive player in the in the specific rare disease market that Alexion has specialized in recently. So it won't be wiping out competition in that sector. So I think those are four. Well, a way that you could split down this answer into 4 different points. Well, if anyone's got anything further they maybe think might be worth adding to this, speak now. Otherwise, I'm happy to move on to question 5.
And here's just like a tip for everyone in general, right? When you look at risks and stuff, there are a lot of times where one risk for a company will be the same for others. So when you prepare a case study or for an interview, you can think about general risks that would tend to not be limited to one case. So for instance, the culture fit is very, very overlooked at. A lot of times people don't really look at it, but it's actually very important. If you look at the size difference between AstraZeneca and Alexion, the way of doing things, that's very different. So, or even, the way that George broke it down is something that you would be concerned of normally anyways. So do look at some common trends in the industry, some common issues, and that would also help you a lot with getting the nuance and level of detail that you might not have just reading a brief, and that will help you stand out and stuff. So George, do you want to take question 5 now?
Yeah, great. Question 5, it's our last question we're asking you for today, and once again, I'd really like it if someone perhaps would have a stab at answering it. It's very broad. I guess it's very much just balancing out the things we've said so far and offering an opinion on it. As I say, there's no real wrong answer. So just put your hand up or turn your microphone on, and we'll go If not, I'll run you through my thoughts. Yeah, okay. Byron, do you wanna go?
Yeah, I can do a kind of a brief opinion on it. I think the deal is actually a good one. I think I really like the play on the revenue. So I know Abby talked a lot about expanding your product line, diversifying your revenues, and I know especially in the pharma sector, R&D is getting a lot shorter. So to compete, you have to pump out new pharma drugs quickly to compete, and the innovation there is just increasing with technology. So being able to acquire, cut your R&D time, and kind of diversify your revenues is a really good competitive advantage for the future. So I think this will give AstraZeneca a good spot.
Great, thanks a lot, Byron. Do you have any points that maybe, I know we spoke about it just now, maybe might sort of threaten the long-term outlook for the deal or for AstraZeneca shareholders?
Yeah, so maybe in the future, a big threat could be kind of maybe like generic copyright drugs or copycats essentially. I know in the case it said that in 2023, that drug that they're acquiring is going to be mass produced by competitors. So I'm worried like the differentiation component isn't enough. So I'm curious to see how strong the acquirees innovation department is, because we still need to adapt. We can't just have a one-off kind of profit from this company.
Okay, thanks very much. Very interesting point there. Okay, does anyone else have any thoughts?
I mean, if you also want feedback, do message after. We'll provide it later. I feel like it's a bit mean to say a lot of info for everyone. But I mean, it was a very good answer. If you want feedback, do message us.
If no one else has got anything to say, I'll run you through my thoughts on this one. So I guess the best way of quantifying whether this deal is a good one, I mean, there's no perfect way of quantifying because we don't have, forward vision. I wish I did sometimes. But the day after this deal was announced, AstraZeneca's share price took a hit, quite a bad hit. I think it was about 7% loss on its share price, which shows that its shareholders perhaps didn't believe it was worth what it was before this acquisition. I guess implied that they believed it's not a particularly good deal. So I guess the best way of running through this is to look at the positives of the deal and then balance it out against the negatives if we were actually doing this in an interview. So obviously the positives, we'll just run through basically what we said earlier. The cost synergies, certainly very large. Revenue synergies, also large. The diversification of AstraZeneca's revenues is positive. Increased gross margin, it's also good in the short run. And increased expertise in the immunology space. So essentially, you're bringing on expert researchers in that area. So that's good for AstraZeneca. I think the bad points would certainly be that AstraZeneca has got very strong forward growth. It went in, I think in 2012 when Pascal Soriot took it over as CEO, it had an enormous patent cliff, which essentially is where, as Byron mentioned earlier, when a patent expires, your drugs will then be allowed to be manufactured by generic suppliers. So it had an enormous patent cliff. Anyway, the pipeline's been built up to definitely one of the best in the business now, and it's got a very strong future revenue outlook. So AstraZeneca shareholders essentially have to ask themselves, they will be giving up 15% of their ownership in the core AstraZeneca company to take on ownership in this new Alexion business. And they have to think, is the future outlook better for Alexion than it is for AstraZeneca? And I think the market probably said no. So that's my view on it, at least. And yes, that's the end of question 5.
Okay, so wrapping up. So we didn't get too much participation, but thank you, Byron. We do hope that this has been useful. It was very fast. And so, I think if you want some further practice, or if you felt that this was a bit overwhelming and do want to look a bit more into it, here are some things you can do. So, spring weeks obviously are great. The BCG one last year, we actually just spent like 5 hours on cases, and that's quite fun. of course, at McKinsey, the boutiques as well. Case competition, Warwick Consulting Society, we have the London Consulting Summit, which has lots of very big speakers. Also has an internal competition. There's McKinsey Solve It. And I think Case Club, which is part of WCS, is also doing a competition this year. They did one last year. We have society events, we might run more. SEO London does a really good summer series called Step Into Consulting. Every week they bring an actual consultant in and do like a structured case interview. Online resources, think you can beat that. We've got our collaborations. I think one of the best ways to learn is actually doing an AC or interview. I didn't really prep case interviews or anything like that, but I found the fastest way to learn was when you're actually in a situation and the outcome kind of matters. You tend to do a lot better than you would if you were like at home and lazy. And of course, read our M&A group reports. George actually wrote a report on AstraZeneca and Alexion, so he's the expert here. If you go onto our website or LinkedIn or Facebook, anything like that, we definitely have that released every month. And in terms of like feedback, we don't know if this was a very good event for everyone, so I did create a feedback form. If you could please take the time to fill that out, because otherwise, like, we don't know if we should do another event like this or if we do something else. And we are a new society, so it'd be nice to know these things. Stay connect with us, stay updated, and yeah, we'll stay for questions now.
I noticed you had a question earlier in the chat.
Okay, do you want to take that then?
From Adrian. Let me just read through it quickly. Okay, yes. So you're absolutely right. We put in the prompt. So Elliott Management is a hedge fund in the US, and it owns a certain amount of Alexion, but it was also putting pressure on it to essentially organize a sale to a larger company or another company, either way. Now, I guess the reason that they would own Alexion is they very much believe in its core business, and it's got a very strong product line. Solaris obviously chucking off billions in revenue, so it believes in the core business, but it didn't have faith in the same time in its management staff that it would manage essentially these very good scientists and this very good product well, and thought that perhaps if it was to sell itself, another management team, and perhaps AstraZeneca's in this case, could help lead Alexion better in the future. Yeah, I guess that would be my answer that I would give, at least. I'm not sure if Adrian's still on the call. Does that answer your question, Adrian? And sorry, on the first part, actually, I didn't really answer that. Does it discount Alexion's appeal to potential acquirers? So this acquisition, I guess, we've called it a spree, but this sort of line of acquisitions has actually decreased Alexion's share price relatively considerably over the last couple of years. I think it was up at about 155 maybe in 2018, 2017, and it was about 121 at the eve of the deal. So it certainly hurt, certainly discounted Alexion shareholders' ownership of this company. So at the same time as, it's not worth essentially as much as it would be had these not happened, would be my answer. Yeah, has this answered your question? If not, just turn your microphone on and we'll put it in the chat, your choice. Okay, great. Yeah, so does anyone else have any other questions? Oh, here we go.
Should I do this one? Oh, sorry. Who wants to speak?
Yeah, I saw that this is being recorded. Will that be sent out to us?
So basically, after you leave, it will still remain in the chat for like a few hours. So you can access it or download it within that time frame. So that's fine. But we won't send it to you, but you just need to come back to this event chat.
Oh, okay. Yeah. I can't see any chat, because usually when I go back, there's a chat.
Oh yeah, it won't appear right now. It'll appear in 2 hours.
Oh, okay, got it.
Yeah.
Thanks.
Okay, cool. So what are typical quant analyses that we might have to do in M&A deal interviews? So I think it really, really matters, because sometimes I did a few last term, and it really depends on the company and how it happens to be. So our event today was based on my Evercore interview, so we kind of basically took the questions verbatim and changed the names like, yeah, but so that might be a bit helpful. It's a super broad topic though, what we chose. Normally it'll be much more technical than what we went through today, but it's not that difficult. Like I crammed in 2 days all the IBD technical information, and that was enough to get me through all the technical interviews and the case interview. What I would say is you should like learn the foundations very, very, very well. All the extra advanced stuff, I wouldn't really bother, but because if you're able to learn the technicals very well, you're then able to when there's a new question, you can basically reason it out loud and like figure it out from scratch, because a lot of times they're not very difficult questions. Like technicals are super easy to learn. They're not like super challenging critical thinking tasks. So if you're able to learn the basics, then you basically apply it to anything else. And also they know that if you're not a finance, or I'm not a finance student, a PPE, you won't be able to answer the most difficult questions. But in terms of like what you'll be calculating, I got questions on equity premiums, I got questions on multiples, I got questions on how do you do DCF, on calculating leverage, on like the leverage ratio specifically, like, make sure currencies are good, other things like that. I think they're quite basic though. I think they're not tremendously difficult. And if you struggle, so in my Evercore interview, like a lot of people struggle with the technical Q&A part, they were able to still figure it out eventually with a bit more prodding, because they usually try to ask you questions to make you think a bit more. So they ask you questions that they know you can't answer, but they want to see how you react. Like, do you start to get really stressed? Like, that's a big no. Or are you able to kind of use your basics, ask the right questions, and eventually reach the answer? I think that's more important than learning everything. Obviously, you need to know a little bit, but I think that's generally like how it is in case interviews. And take good notes, because sometimes that can actually really help you with the technical section. Otherwise, if your currencies are all over the place, you can't calculate anything. I hope that answers your question, Byron.
Great. Does anyone else have any more questions?
It doesn't have to be a case study. You can just be about general applications. Like, yeah. I only applied for IBD, so I can only answer those. If you don't, like, we'll stay on until 4, and if you want to leave beforehand, that's fine. If you have any questions, we'll just stay on anyways and do our own thing. Yeah.
Also, feel free to, I'm not a big buyer in LinkedIn, but feel free to, if you've got any questions, go through that.
Okay, so case study interviews and conversion. I have like a really traumatic experience from Morgan Stanley. So I did my spring week in Morgan Stanley. I did a few spring weeks, and the worst and like the most traumatic one was Morgan Stanley. The rest were pretty chill. Actually, I didn't have any other conversion interviews because it was like COVID. So yeah, I think it depends on what company you go for, but they are a lot more technical than people would have you believe. Because I went in not knowing anything, because I thought in previous years, people had told me it's really chill. You just need to know like what EBITDA stands for and you're good. Because I did a case interview to get into Morgan Stanley Spring Week, which is actually very, very chill. It's completely qualitative. So when I went in, I was not prepared to start doing calculations on things I hadn't heard of. So that was pretty bad. But I think there's also an exception because of COVID as well, and they had no idea how to do things. So I applied for IBD, and I'd say it's about the same level of difficulty as the one we did today, but except you're with somebody one-to-one. So he started asking me like, can you like calculate the equity premium, and then or like the leverage ratio, and then I didn't know what leverage was, so I asked that, and then I got the currencies wrong, flipped it the wrong way, and it was a disaster. So for conversion interviews, you don't have to be amazing, but do like spend, actually 2-3 hours is enough, but I just didn't do 2-3 hours. So do that. Yeah. Do either of you have any thoughts on the next question? Okay, yeah, I can answer this. I do PPE, so like the closest thing to finance in there is like economics, and all you learn how to do is like shift a diagram up and down. Like, yeah. So it's not very useful at all. I don't know why people draw the link to it. I think philosophy is more useful than economics, but that's a separate point. I think people always say that, oh, if you study like PPE or something that's not finance, they'll be more lenient. But honestly, like I didn't get that. Like my questions were hard in the interview. Like they weren't that hard. They were doable. But I think it was the same level. I had master's students who did like 5 years of finance, and they were getting the same questions as me. So I don't actually think they differentiate that much. Because at the end of the day, it's like some random MD interviewing you. He doesn't really care if you're like a finance student or a PPU student. He'll just kind of give you a question that comes off the top of his head. You might get a bit more leniency in HR interviews. So when I did like round 1 or 2 for like Bank of America, they like, he asked me what DCF was, and I barely answered it because I was surprised by the question, which is really stupid. I should have known that. But he's like, yeah, that's really good. Like, you're doing fine. Like, and then he admitted me to the next round. So obviously they do care a little bit. So yeah, if you're studying economics or biology, I think it'll be the same. Maybe the expectations are different. But regardless, technicals aren't that hard in an interview. Like, know the basics and you'll be fine. Know the derivations. So the way I think about it for like preparing for technicals, lots of people just say, oh, read 400 questions and you'll be fine, which is true. But what that doesn't do is teaches you how to answer a question, but not how to think about a question. So think quite naturally, like if you were to look at this as if it was an academic paper, what would you ask next, right? So, when I was reading about, it's left my mind, but I was reading about beta, right? If you're looking at, at the DCF, then I was saying, okay, what beta? And then like the next question is, okay, how do you calculate beta? And then that actually gives you new insights into ways of thinking about things. Or if we look at like terminal value, for instance, most people just do like, you do multiple, but if you look at the Gordon's formula, right? The next question is like, okay, how do you get this formula? How do you distill such a complex item into one? And okay, actually that's like a sum of a geometric series. It's actually not a very difficult concept, but that's how they derive that. And once you start having that that train of thinking, when you actually do a case interview and we do technical questions, you are able to think it through more clearly and do it step by step. And that's what is really helpful. So I had a question in my JP interview. I had no idea how to answer it. Like I was like, no, I did not know at all. And he spent 10 minutes being like, how do you not know this? Like if I asked a finance student, he literally asked me like, why don't you have more internships in finance? At the end of the day, it was fine. I still got the offer. But that was like him trying to show me. It was him like trying to grill me really hard on a question I had no idea about. And it all worked out. I didn't stress out, so it was fine. I was just like, I felt so screwed to the point I was just laughing, so it was fine. Yeah. So did either of you do springs, by the way, for converting?
I'm a first year, so I haven't converted any springs yet, to my knowledge, at least.
Audrey, like what spring do you have? I might be able to tell you a bit about that.
Yeah, I mean, I have one at JP, but I haven't done it yet, so I can't really comment on how to convert.
Oh, JP doesn't cover anyways. Fun fact. But Audrey, like, do you have a specific spring you want to ask about? You might know a little bit more. If not, like, we can just do general advice. We'll actually be doing converting a spring week event in like a few weeks. Okay, Lazard. Okay, cool. They do. I actually had an offer from Lazard last year, and I like alienated their HR. That was fun. So Lazard, if I remember, it's like Tracy who runs the interviews. I think there's like 3 HR people. So there's Tracy, then there's somebody from Hong Kong, and then there's like Rose, I think that's her name. And they do convert. Like Lazard is really good with their conversion. Basically, what you want to be, I mean, this is from what I can tell, right? From what I knew, is that they run an AC at the end of the 3-day spring week. I think it's virtual as well this year. What they did last year, from my knowledge, was that they didn't do any like technical questions, nothing too difficult. Maybe like you need to know your basics, like what's a DCF, what's comparables, nothing more detailed than what we did today. Definitely not. And then what they mostly care about is your fit interview. So I think they do like 2 30-minute fit interviews. And I think that's the most important part for Lazard. So I think fit interviews you can't really prepare for because it's like you as a person, right? You can't really change your personality for an interview. You are who you are. If that works well with the company, then that's great. If it doesn't, then it's probably not for you anyways, especially if it's an elite boutique. It's not like a big company which has a homogenous culture. So yeah, do a little bit of technicals, like 2-3 hours is enough. Maybe go through today's case study. yeah, that's about it. And like during the spring week, I guess Lazard ran a very, very interactive one last year. Like they had chair yoga, they had like workouts, stuff like that. So do participate, do make yourself known. There are only like 3 HR people. So if you make a good impression, it's quite easy. And maybe talk to your interviewer before the spring week, ask them for some advice as well. If it's still Tracy, she's super helpful. I actually ran a session with her last April on diversity in the workplace. If you want me to send that so you can have somebody to talk to her about, like message me on LinkedIn. Hopefully that helps. Yeah. Okay, are there any questions or no? No worries. Okay, I don't think there are any more. If there are, like, ask now, or we'll just like start ending the call. If you have anything pop up that you don't want to ask publicly, or like you want something more personal, then just message me on LinkedIn. It should be Abigail Chen, not Abby. So, and just put Warwick and you'll probably find me, or something like that. Yeah, and yeah. And I guess the same goes for George and Inez if you have anything to ask them as well.
Yeah, absolutely.
Okay, yeah, Adrian, like hopefully we'll do more sessions. Like we didn't really have very much like real-time feedback for it, but hope it was good. Yeah. Should we? Yeah, George, could you end the recording now? Actually.
Yeah, I will try and do that.